There we go. There we go. Okay. How are you all, huh? How are you doing? Okay. And good. I just sorry for being a little late here this morning, this evening. We're getting things just let me see if this works. Here we go. We're yeah, I just had to get the YouTube going. So we're working on that. And a lot of people had to help get online as well. So anyway, thank you for your patience. I'm gonna make this worth your while. You won't believe. So, all right. Just hear music will be starting shortly. We'll be startling shortly. Yes, Paling. Yeah, it's not a typo. It's a play on words. Startling play on words. She's here with us. We'll be starting shortly. I've got word. We'll be startling shortly. Thank you for picking that up. Okay, so yes, there is a webinar, and we are on now. Okay, let's get going here. We'll start the meeting here. Got to record this. All right, good evening, everybody, and welcome to DayTradeSPY.com's Week in Review. And my name is Hugh. All right, and yeah, let's see, what is it? Today is, of course, Sunday, August the 20th, 2023. Summer is slipping by, let me tell you. Just a couple more weeks, I guess, and Labor Day, and that'll be it, right? Got to give you this disclaimer here real quick, give you a chance to read this as we get into the weekend review. I think you all understand that you alone are responsible for all your own trading, and past performance does not guarantee future results. Okay. That's to keep the lawyers going. All right, let's move along. How many people here are new? I just want to ask you a couple little things here for housekeeping. If you are new, please let me know in the questions box. You'll find a little questions box icon on your Zoom dashboard. Just click on that. I am the only one that sees that. So just go ahead and tell me if you are new. Okay. All right. Good to see that. Good to see that. All right. Here we go. Here we go. Week in review, and my name is Hugh, and let's just get into it here. Again, the questions box is open for your questions and comments. So tonight, what we're going to talk about here is a couple things. First of all, I'm going to give you a bit of an introduction, and then we'll take a look at the week in review and look at next week. A bit of a fireside chat, and your next step into making some serious money on the market. And I actually have a really cool thing for you here tonight. I've never opened it up here like this to what we're going to be doing here tonight. I think you're going to be very excited about what I have to present here to you tonight. So make sure you stick around. All right, especially for the new people, a bit of a background. I come from a corporate world, right? Corporate America world. And internal audit, as a matter of fact. So I was working with numbers, and oddly enough, yeah, let's see. I actually have, believe it or not, I got a new phone here today because the my current phone just died on me yesterday. So I'm just going to get rid of this, and it's an i14. I got an i14. That's an Apple i14. Okay, let's see if this thing works. Bear with you for a half a second, ladies and gentlemen. And there we go. Okay, we're back to normal. Anyway, I like the good salaried employee, I'd hand off a lot of my money to my financial guru to invest in my future. And by the time I realized how bad things were, about half my capital was lost. Needless to say, I was quite angry about it. And I called my broker and withdrew all my funds immediately. And I swore that I was not going to let this happen to me, or especially my kids. I did not want to make sure, I want to make sure my kids are going to get an education. So I vowed right then and there that I'm going to learn how to do this myself. And I took all these courses, everything, I all over the place. I just went all over the country, learning. And I took away some very interesting pieces of information, some of which were very good, others what not to do. Not everything they taught was good. But anyway, I eventually discovered a system that worked very well for me. All right, very well for me. And there's never any thought of teaching others how to trade. That was never in my mind. I just traded for myself. And obviously I quit my job because I was doing quite well with this. And I, excuse me, I also, I was asked, when I started bringing home, a lot of new things, toys, new house, new airplane, and and vacations, all these things. So I think life has instantly changed for the better. And of course, my kids now we're going to go to a good school, a good college and university and stuff, and all that. So people start to take notice. And they start asking, okay, here, what's going on? What are you doing? Can you put it up on a website, what you're looking to trade every day? After I told them, yeah, sure. So that's kind of where things started. I just want to see if how's the lighting in here? Is this lighting? Is this a little bit better, maybe? A little bit brighter? Okay, there we go. Anyway, so I was coerced into teaching people what I was doing. I set up a little website, and again, no interest really in teaching people, but I started teaching, and I quite enjoyed it. I enjoyed watching other people make some serious money on the market and doing well, and I got a real thrill out of it. And of course, it just ballooned from there. That was back in 2010. 2010, we started this, and of course, today's 2023. We are now in our 14th year of doing this, and I don't know of any other service that has been sort of a kind of like a one-man show type of thing, that's been going on that long, or 2 or 3 people. I mean, there are some companies out there that have been doing this a long time, but they're more corporate, But anyway, we've been going this for a long time, and as far as I know, we have the longest running trading room in the 14th year, and continuously, on and on. So anyway, that's my background, and again, a good strategy and some good solid support from people, and people wanting to know how to do this, and strangely enough, things just keep going, and a lot of people are making money, and that's what I did. Now, I consider that I learned from the trenches, because a lot of what I did there was sort of different than what was taught in some of these courses and stuff. I'd learned a lot of really cool things, and a lot of it was stuff that I did not learn in these courses. These are all self-learned things. I thought, oh, interesting. Okay, well, this works. Well, that doesn't. And the funny thing is, so every time I had a loss, and I had lots of losses along the way. Don't kid you. All right, don't let me kid you on that. The path to success is not a straight line. It is not a straight line. It's okay, zigzag, up and down. Sometimes you go down a lot before you come up. Let me tell you, it is a long and winding road. Okay. But anyway, I learned a lot of stuff. And then things that I teach, you will not necessarily learn anywhere else. Probably not. A lot of the things I teach is stuff that I learned the hard way. School of hard knocks is what I say. So anyway, that's me with my dog, Lucy. I love my Bernese Mountain Dog very much. And my partner in crime is Aaron. Now, what happened was last year, 2022, we were bought out. We were approached, and we were bought out by Eagle Financial Publications. And they made us a deal we couldn't refuse. So, but we're working together. And they brought along Aaron, who is an incredible analyst. This guy, he mastered this deep dive technical analysis way back in his teens. He's 40 years old right now. He's been at this a long time. He actually worked as a technical analyst for a commodity fund, and they managed something like $150 million. So he was the guy that would say, the way I see it, it's going to go up, or it's going to go down, and here's why. And so the managers would follow his lead, and they would make money. And we were very fortunate in getting Aaron to join us in our trading room. And he brings his skills, his lifelong skills, into our trading room every morning, 9:20 to 10:30 Eastern time. He identifies those longer term, high probability trades, and it's unbelievable. So he comes with a different set of indicators that he uses from what I use. I like to kind of keep things simple, so I come up with a certain set of indicators that I like to use, and he comes out with a bunch that he likes to use. But I'll tell you, when he says the market's going up and I say I think the market's going up as well, when we independently come up with this idea, then what we like to say, when our indicators unite, our trades ignite. And there's a lot of truth to that. Okay. And when he's not trading, he wants to hang out with his kids in the sports field. So kind of gave him the day off today. So anyway, I'm doing this on my own. All right, gang. So I got a question for you. If you don't mind putting this, your answer up on the questions box. A little bit of interactivity, engagement here. Just want to know, what is your goal here for your daily profits? Are you content with making $100 to $200, 2 to 500, 5 to 1,000, or over $1,000 a day? Just want to get an idea of your daily goals, your aspirations as to where you see yourself trading. And then I'm going to show you how we can get there. All right, we are getting over 1,000. Yes, yes. And welcome new people. Okay. A lot of people just 2 to 500. That's cool. There's some, so kind of a bit of a mixed bag all over the place here. Okay, well, that's kind of interesting. All right, well, we have strategies that can do that. All right. As a matter of fact, you can start with not that much money and make some pretty serious money on the market. I've got some people that are content with making $100, $150 a day. And I've got other people that are doing actually $1,000 plus a day. So kind of all over the place. I'll get to see that. So being in the summer, usually we have a fireside chat. We're going to call it a beachside chat since we're at the beach. And here's what I'm going to, anticipate that we'll be talking about here. If you don't mind putting your comments up on the questions box, and I'm the only one who sees that. What is your experience with training courses? And I want to know kind of what your experience is, and I wonder if it's similar to mine. One of the things I learned in a lot of these courses is what not to do. And one of them is don't give them a lot of crap. Pardon the crudeness, but be honest, be open, be sincere, be authentic. And I think people respect that. I make a lot of my money trading. I make a lot of my money training. I'm not going to kid you. I make a lot of, it's a good split. But I can just trade and make my income. I don't have to be out there making $1,000 a day anymore. I mean, those days of heavy duty trading in the past is sort of behind me. I'm almost kind of doing this almost for a hobby right now, teaching people. But I think it's very important to be very authentic, very real with people on stuff. So, and I think that's respected. I want to know what your pain is. What is your pain in trading? What do you find are your challenges? And if we can kind of get down to some of those and discuss maybe a few of those, that's all the more things that we have to kind of discuss here. I want to ask you too, if you have any seed capital, because let's be honest here, if you're coming here with no money down, this is not the course. All right, I have to laugh. Back a long time ago, I remember watching those infomercials on TV. I'm sure, no money down, buy real estate, get rich in real estate overnight, no money down. And it doesn't work that way. You'll need a little bit of seed capital. But I don't know if you can get your hands on at least, $3,000, $4,000, $5,000, $6,000. And if you can do that, we got something to work with, you know what I'm saying? And I don't know if you accept the fact that training is kind of important rather than just jumping in. Now, admittedly, when I learned to trade, I did not have a Hugh to learn from. I learned the hard way. Like I mentioned, School of Hard Knocks. And I really wish I had, training that we provide. We didn't have that back when I learned this stuff. But I'm asking if you would accept the fact that if you invest in yourself first, get some training, then get into the market, that you're probably going to do much better than if you were to jump into this thing sort of trial and error. Also, I'm going to ask you if you're willing to put in the time and effort. All right, this is very exciting because if you are, you'll see the benefits, you'll reap the rewards, and the dividends pay off handsomely if you're willing to put in the time and effort to learn how to do this. If you think you're going to just jump in and suddenly make a lot of money, well, you may get lucky, may get some beginner's luck or something, but it won't be long before you're pushed right back on your backside. And then I also want to tell you about an exclusive get off the fence offer. And we have never promoted this special offer here before. And after we get our quota on this, I can assure you we likely will not promote this again. It is just that good. And I really want you to all stay to the end of this, because you are going to fall off your chairs when you get this particular offer. I think you're going to be very excited about it. All right, the week in review. This is a chart of the week. As you can see, it has not been a great week on the market. All right, so what happened here? We're going to kind of quickly go through this. Monday, it was a no news day. SPY bounced off support, gravitated up to a breakthrough, a 449 in post market. Markets, if you leave them alone, they like to go up. They just like to, they gravitate to the upside. But we had a nice move to the upside. Bit of a pullback off some pretty major resistance, and then grew some legs and kind of went post market. It went up to a really strong resistance level of 499, which technically was a very hot spot that we identified in Aaron's longer term charts, and we were bracing ourselves for a bit of a pullback. Now, admittedly, didn't realize the pullback was going to be as key as it was. It bounced off a key resistance with some better than expected retail sales, and with it, inflationary concerns. So when retail sales are hot, and they were, all right, it says that, you know what, the economy is chugging along very nicely, thank you very much. And it's suggesting to the Feds that maybe we should increase our interest rates again to cool the inflation factor. We still want to get this down to 2%. We're not quite there yet. And so that was of concern to the stock market. We're also getting ready to get the release of the FOMC, the Fed meeting minutes that was going to be released the next day. And the market kind of pulled back on a little intrepid kind of a trading period there. It's also, especially in pre-market, we did not see much of a move to the upside. It did come up a little bit around the 444 level, and then it bounced right back down. Market open here on Wednesday went up, but right after the FOMC meetings minutes were released, we saw a nice move to the downside. All right, and there's discussion on that we're not out of the woods yet. We're not finished. We're going to keep an eye on the indicators. We may be still increasing interest rates. We've got a July meeting set up for that, and possibly in July, possibly in November. Maybe there's still 2 more rate hikes this year, and of course that spooked the market a little bit here. And coming up on Thursday, the Philly Fed Manufacturing Index also reported an almost 20-point over expected number, also suggesting a robust economy. Comments from Fed members said the rate hikes are still likely, and that, of course, was enough to move markets back down to several points on that one. Friday, pre-market took SPY right down to levels not seen since late June. All right, the spillover from Thursday ran into Friday, but buyers acted on the opportunity, started pushing prices back up. We finished at the mid 436s. We sort of wiped out the pre-market losses, but we didn't get out of the trenches quite yet. Where the markets are going to go tomorrow, we're going to wait and see. But I suspect we may see a bit of a pullback. We're going to see what happens. Here's what happened week in review. All right, S&P actually dropped 2.1%, NASDAQ 2.6%, and the Dow dropped 2.2%. All right, pretty steady along the way. But year to date, we're still actually quite a bit higher than what we started the year with, 13.8% on the S&P. Global growth concerns shifted to a rather weak August market. Expectations became more realistic. The economy said, well, it might slow down, but not a severe downturn or prolonged deep decline in equities. So that soft landing is still there. We're not looking to see a massive decline like we were all afraid of here. Rates do reflect more economic growth rather than rate hikes to curb inflation now. So here's what the chart looks like here. The S&P 500 year to date ran right up into July, right to the end of July, and then we saw the August pullback, and this actually may go into September. We're going to see where things go, but we saw quite a drop here in the last few days. In fact, we dropped about 5%, like they say here, in the index year to date on this. So that's kind of the way it looks here. But I think what's and here's the seasonal chart, folks. So for those not familiar, that blue line is where SPY is now. So we trade SPY, SPY, the S&P 500. That's all we do. One stock, one strategy, basically 1 hour a day. That's kind of the way, sort of the motto, to make 5% or more. Sort of a loose motto on that. But this is where SPY is, the S&P 500. That's the blue line where it is now. And that red line is a composite of the last 5 years closing prices on the daily charts. So let's kind of expand on this a little bit here and sort of see what's gone on. Seasonally, SPY dropped less than a point over the last 5 years closing balance if we look at what's coming up. So it's going to be very flat. Well, not necessarily. I don't know where it's going to go, but if we judge by last 5 years, daily charts, it was a pretty flat kind of a period that we're heading into. So you got to be very careful on what's coming up on this. All right. That's kind of the way it's going seasonally. Forward looking is what's more important. On Monday, another low or no news day. Tuesday, we've got existing home sales, Richmond Manufacturing Index. And on Wednesday, we've got a flash manufacturing PMI and also services, a flash services PMI report. New home sales, crude oil inventories, and also unemployment claims, durable goods orders on Thursday. On Friday, going to be a little bit hot. We've got the University of Michigan consumer sentiment and also inflation expectations. And Fed Chair Powell speaks at the Jackson Hole Symposium in Wyoming. And no doubt they are going to be discussing the future of inflation and interest rates. So where does that leave us? Expect fairly low volatility on Monday, moderate volatility midweek as we run into the end of the week. Getting into Thursday and Friday, I expect volatility to increase, and I expect range-bound trading, possibly recovering of the recent downtrend. So the trick here is to just trade small, trade often as we head into this sort of a trading period. Markets could go down, they could remain flat. We may see little spikes to the upside. Depends on what the markets come in like, and it's going to be an interesting kind of a period. Okay, probably not much action, but it's interesting in the fact that when things are flat and they're not really moving quickly to the upside, it's not like you can just buy anything out there and it's going to go up. So you have to be very careful. It could be very sort of iffy trading in the next little while, right? Especially when if history should repeat itself. All right. So that's kind of the week coming up. Sometimes too, it's not a bad idea to sit on the fence if you're not sure or don't feel confident in trades. And that's something I may do as well. I mean, I'm not committed. I don't have to trade. So anyway, look at it, folks. There are actually many opportunities all day long in the market, especially the way we trade. There's a question up on the board here. What happened to that sell in May and go away? And I just want to mention here, that doesn't apply to us, because what we do here is we actually make money both going up and down. And that's the beauty of what we do. You see, as a trader, I'm just not all that smart in that I have any idea as to where the market's going to go a year from now. I know some people say, oh, a year from now, we're going to be, or even 6 months from now. In fact, I don't even venture to say where SPY is going to be a month from now. I might have a guess. I might be 50-50, right? Or, even a week from now. But I'm very confident where it's going to go today. So this is the beauty of what I did. Now, just kind of going back a little bit here, I want to sort of loop around and tell you a little bit about my experience in that when I started trading, like probably a lot of people, I started with equities and I looked at other tradable instruments as well, things like commodities, futures, and Forex, foreign exchange. No, Steve, I did not look at crypto. We didn't have crypto back then. At least I wasn't aware of it. Actually, no, we did not have crypto when I first started this. And even if we did, I probably would not have looked at crypto, and I still don't look at crypto. But, I looked at a lot of different things. But I eventually found, SPY options. Like this was not a straight line, like I say, into what I'm doing now. This was actually quite a circuitous. Is that the word for it? Circuit. It was a circuit. I went around and weaved in and out, and I tried this and tried that. And I traded options, and then there's something that intrigued me about options. I heard that maybe 95 up to 98% of the people lose their money on options the first year and they stop trading. Now, normally that would scare me away, but I thought, wait a second, really? And why is that? Well, it's because they don't know what they're doing. They did not know what they're doing. I said, oh, so that's really interesting. I found that to be intriguing. The reason is because I realized then that, you know what? I don't actually have to be necessarily all that great at it. I just have to be better than 95% of the other people out there. And if I stay with it long enough, I'm going to get good at it. There's something that I read once that if you do something for 10,000 hours, you actually get good at it. I can assure you I have a lot more than 10,000 hours at this thing. And so I became probably better at it than a lot of other people. And now, if there's going to be somebody who's going to lose money, let it be somebody else. And if they're going to give money to the market, I might as well give it to me. That's kind of my attitude towards it. And I'm sorry, I don't feel bad for it because everybody knows the risks and rewards getting into this business. And if you're not going to take their money, the way I look at it, then somebody else will. So might as well be we day trade spyers that are going to take the money from those people who are willing to give it up. Anyway, markets go up, they go down all day long. There are many opportunities during the day to make some money on the market. And we teach you how to spot them and how to trade them. So I actually have an exclusive offer for you right now that I'm going to be presenting to you. And I have never put this out there in such a way and in such an offer that is going to blow you away. But this here is a get off the fence offer. Those of you sitting on the fence are going to be pushed off the fence right now with what I'm going to tell you. Okay, I'm not going to mince words. We have personal training with myself and or Aaron. Actually, it would be or myself or Aaron. Your choice. Your choice. And if you don't choose, it'll be me. You're stuck with me. All right. This here, folks, is one-on-one coaching from experienced traders. All right. Now, Aaron and I, and I'm going to put this in quotes, one-on-one, is this in here? One-on-one coaching. There you go. One-on-one coaching from experienced traders. Where did it go? Yeah, there we go. There we go. All right. And I should tell you that between Aaron and myself, we have over 40 years market participation. Over 40 years. I'm not saying we did our strategies for 40 years or even 20 years each. I'm saying that we were in some form in the market for over 40 years combined. You'd think that we'd have learned something in that time. I don't know of anybody else who's got, I mean, there's some people that do, but we have a lot of experience, and you are going to be learning from experienced people. Now, these sessions are going to be on Zoom, and you're going to go to our website, DayTradeSPY.com. Let me see if I can actually pull it up so I can show you what you're going to do, because I think it's important to kind of guide you through this so you don't think that it's going to be difficult. It's not going to be difficult at all for you to get in on this. So you're going to go to the website and over here. So once you register, pay, and you go through the various whatever it is that Eagle makes you go through to pay, you're going to register for this, and all you have to do is schedule a meeting. You go to schedule a meeting right here, and you're going to get our calendar, and you just put it up to your time zone, and then book a time. You're going to see the various times come up, and just click on one of these, and then that's going to be your time. That's going to be your time. Okay. So now this does say 15 to 20 minutes, but don't worry, you will get 30 minutes. 30-minute segments, because that's what it's going to be. We are going to, where is it right here? These are going to be in 30-minute segments. All right. So you're going to get 10 hours for $9.95. This is a limited time offer. You're going to learn how to trade consistently, confidently, and profitably. At least that's the objective. Whether let's put it this way, we're going to teach you how you can trade like that. Whether you do or not, whether you pick it up or not, that's going to be up to you. But we're going to teach you, and we're going to discuss anything at all related to day trading SPY options, the way we trade, whether it's options basics, chart patterns, setting up TD, Ameritrade, Thinkorswim, or Tasty Trade, the programs that we use, our various strategies, mental aspects, how to repair trades gone bad, all of that, whatever you want to learn. Or if you just want to say, Hugh, teach me everything you know. Okay, let's go. Let's start from A to go to Z, and let's start from soup to nuts, whatever the saying is. Or if there's a particular aspect that you want to learn and deep dive into, for example, what Aaron's doing, you can do that too, whatever it is. This, folks, is going to be a limited, it is a limited time offer, 10 hours of personal one-on-one trading for $995 to be used in half-hour segments and to be used within 12 months. To be used within 12 months. This is our special get off the fence promotion, personal coaching from myself for Aaron. All right. You can decide who you want, or we'll just, go with me or whatever. My question to you, can you afford not to purchase this? $995 for personal coaching. All right. I see people are already excited about it. What's the catch? The catch is that we just want to get as many people online doing this as possible. And I'm going to tell you, all right, I'm going to be very upfront with you on this. Aaron and I do not go out for $995 for 10 hours, but the folks over at Eagle made a deal with us, and they're digging deep into their pockets to facilitate this. Their objective is obviously they want to get a lot of people learning how to trade, learning how to profit. It's very important for them to see a lot of people doing well, as it is for us. Anyway, that's kind of what we're doing here. Any questions? Please put up in the questions box. I am here to answer them, and I am going to go over some of the questions now, as I see a lot of people have already put in some of their comments here. And yes, you can make $1,000 a day. Now, how would I do it? Ahmad, I hope I pronounced that right. Hamid Ahmad, I think it's Ahmad. The way I would make the $1,000 a day, I would probably scalp that up, in and out, probably trading starting with 10 to 20 contracts. I would have to have a little more than $5,000 seed capital on that one. Yes, but you can do it, and I had to do it very carefully, and I would teach you how to do that. I'd be very happy to do. That's my favorite strategy, scalping. That's where I get in with sort of a bigger purchase, but I'm going for smaller gains multiple times a day. And interestingly enough, especially when there's a lot of volatility, you actually get that. And by the end of the session, which is usually when I'm hot on that, when I'm talking about 11:30, 12 o'clock, by that time I can usually walk home with a nice bag of cash, and it's not impossible to make $1,000 a day. Gary's saying most of these courses are a lot of fluff. Gary, you are so right. We're talking about other courses. Look, I'm not here to slam other courses. Excuse me. But for me, they didn't really work out well. I would buy a lot of their stuff too. And I like to say I won't say I got fished in. Obviously, I knew what I was doing. I got so lured into the promotion of it. Wow, I can make all this money, and all I have to do is put this DVD or CD into the computer, and it's going to pick all the stocks from thousands of stocks. What do you think of that? It's going to pick the best from the thousands of stocks. Well, when I did that, I realized I learned something very important. See, I took away a lot of lessons from a lot of things. As an internal auditor, my job was to stay aware of things that are going on, and be aware of things, and learn from things, right? And study things. And one of the things I learned that from some of these stock picking kind of programs was that, well, every stock, whether it's an equity or an exchange traded fund or what have you, has its own personality. They're like people. Of all the people I know, every single one is different. Even my kids, I have different kids, and my daughter has a different personality than my son, and all my grandkids have different personalities. They're all different, and you have to treat each one separately according to their personalities. And that's the way I found stocks too. Some stocks all behave differently, And, and you'll see this come out like on earnings, say in an earnings, we just had an earnings season. So for example, some stocks, they have better than expected earnings, and you'll find that their stock generally goes up. And on the conference calls, they might talk the stock up, and investors are pushing the stock up, and it goes up 10, 20, 30%. And other stocks, when they have great earnings, the people in the C class, chief executive this, chief executive that, they talk the stock down somehow. They might say things like, well, yes, we had a great quarter, but we don't know if we can extend this into the next quarter. And all of a sudden the market gets spooked out and the market tanks 20%. And so if you're trading earnings season, which is what I used to do, all of a sudden, wait a second, what just happened? What was that all about? Let me see. We beat expectations by 35% and the market tanks 40%. How could this be? And if you're trading options, I don't have to tell you what that means on the options market. I remember this one company I traded. It was called, of course, I forgot the name of it now. It was a communications company, Nortel. It was called Nortel. Excuse me while I take a drink of water here, dry my throat, wet my throat. I have a dry throat. And I remember Nortel missed their earnings by, I think it was 0.25%. 0.25%. And man, I had high hopes for this stock. It was going to go to the moon and all. 0.25%. And the market punished that company like you wouldn't believe. I lost thousands on that stupid thing. I thought, oh man. And then I went back. See, here's the thing. With every loss I had, I would try and go back and learn, take away a lesson from all these losses. And one of the things I learned, for example, with earnings season was that volatility increases as you get into the announcement of the earnings. Now, you can actually have the stock going up after the earnings comes out. You can even have it go up and you wake up, oh my gosh, the stock just rose, and yet your option dropped. Well, how could that be? You had a call option, which means you're actually expecting the market to go up. You buy a call option. Okay, if you expect the market to go up, you buy a call option. If you expect the market to go down, you buy a put option. So I would be sitting in these call options expecting the market to go up. I wake up in the morning, I check my sell, and oh my gosh, the stock is going up. This is phenomenal. And then I open my option chain and my option lost money. I'm in a losing situation. How can this be? Well, it's because they suck the volatility out of it. You see, when the news is released, the volatility goes down. And the value of the option goes down with it. So you might think that it's not that big of a deal and it's going to come back up. But here's the thing. Let's say I bought an option for $2. And then I thought the market was going to go up, and then the option is now worth $1.50, even if the stock is higher. Wait, I just lost 50 cents? Well, the stock doesn't have to go up 50 cents to recover the 50 cents on the option. No, you have to divide that by the delta. Now, the delta is this thing that measures the rate of change in the option vis-a-vis the stock. So if you have a 50 delta, what that means is if the stock goes up $1, then the option goes up 50 cents. So if I suddenly lost 50 cents on my option, and I happen to have a 50 delta on this, I have to divide the 50-cent loss by the delta, which is 0.5. That means the stock has to go up $1 just to make up for that volatility squeeze. You see what I'm saying? And these are all things we teach. A lot of people don't know this. As a matter of fact, in hindsight, when I look back at my early days and I would have some losses, and I had wins and losses, and honestly, I didn't know what I was doing in those early days. It's like a crapshoot. Oh, this looks good. I think I'll buy this stock. Oh, I like their products. I'm going to buy that stock. Or I got in for all the wrong reasons. And like crazy, I would make some money and then I would lose money. And I remember when I would lose money, I would say, well, what was I thinking that yesterday this was a good stock? And it was good. I thought it was a good stock. I don't know. And yet today, the same situation, I thought, and I'm losing money. What changed from yesterday to today? And then I remember kind of going through this exercise. And I remember telling somebody this, and they said, well, do you look at the Greeks? I said, no, I don't look at the Greeks. Well, maybe you should. Well, what are the Greeks? And then they told me the Greeks are, and so I went through the Greeks and, oh, that's interesting. Aha. See what I'm saying? I picked up all these things. And then when you put it all together, all right, I mean, look at, I'm not very good in the kitchen, but I'm pretty confident that my wife has enough ingredients around in the kitchen that she could probably bake a cake tonight if she wanted to. And I know that I probably could too. There's the ingredients. I'm sure if I said, Daylane, I want to bake a cake, she'll probably say, okay, well, here's the flour, here's the sugar, here's this, here's that, here's this, all these things, right? Here, knock yourself out. That's what she'll say. And I'll say, okay. Well, now the question is, well, how do I put it together, right? And think of it this way, folks. That's the thing. You probably, know a lot of things, but how do you put it all together? How do you know when to buy? How do you know it's a good setup? How do you know that just because you have a good setup, should you be in the trade or not? Maybe you shouldn't go in this trade, even though the setup is there. Not all setups are good, profitable trades, right? Not all setups are good, profitable trades. A lot of trades have a good setup, but you should not get into the trade because for various reasons. I'm not going to get into all the details now. That's why you take the course, because I don't want to give you these little piecemeal things, because some people are on this chat line. I recognize the names. They don't buy anything. They just want to get the little pieces together. They think they're going to put it together and get the ingredients and the recipe and the instructions on how to bake the cake. And then they're going to put it together and go ahead and trade, and oh, they're going to lose money. And they say it doesn't work. Well, no, it's because you forgot that key ingredient that I didn't tell you. You see, you have to put it together all at once, not little piece by piece. All right, let's get to some more questions here. Pull back from the downtrend of last week. Mike, I suspect we may see a pullback from last week. We'll have to take a look at tomorrow morning and see what's going on. But if there's no high impact news to thwart the market down tomorrow, I suspect, I know I'm going to take a look at it to see where the market may go next week. Kind of want to see what happens here. Okay, question concerning, yes, pattern day trade rule. So yes, how are you able to do this with the seed capital of $5,000? Anything to clarify? Absolutely, David. So there's a rule that if you are in the US, if you have less than $25,000, you can only trade in and out in a 3 times in a 5-day period. 3 times in a 5-day period. That's to kind of curb that gambling, tendency. They want to make sure you don't get into this gambling mode. You're going to blow up your account and everything else. Now, there is a way around that. What you have to do is simply get a cash account. Do not get a margin account. The way we trade, you do not need or even want a margin account. A margin account can be dangerous because if you see, oh, look at this, my account balance is $38,000, you feel like, oh my gosh, I can trade it. Well, actually, you can't. Why? Because half of that $38,000, $19,000 is margined, which means your broker lends you the money. And yes, as a margin, you can trade $38,000, but if you blow that out, you're not trading anymore, and you're going to be going to get another job so you can pay the $19,000 back that your broker lent you. This is not monopoly. It's not a game. It's serious. Look, get a cash account. It's actually easier. And this way you can trade as much as you want, as long as you have the cash in your account. So if you have $5,000, that means your first day, you can trade up to $5,000. Now, let's say you made $300 that first day. Well, you cannot trade $5,300. You can still only trade $5,000. That $300 profit has to settle. That means you wait until the next day when it goes to the clearinghouse and comes back. Yes, you now have $5,300 the next day in which you can trade. So you trade $5,300 up to $5,300 next day. If you want to do 3 trades, $1,000 here, $2,000 there, and another $2,500 or whatever, you can do that. As long as you don't go over your balance in your account. Now, what a lot of brokers do, I don't know, maybe they all do, but if you do go over, there's a couple things you can do. First of all, if you are in a trade, then do not close out that trade that same day. If you can hold on, close it out the next day. And therefore, excuse me, you are not going in and out, in that time frame and closing out and going over your threshold. All right, you're actually doing it the next day, after which some profits or whatever had settled. Okay, that's one way. But the other way to do it is, what happens is, if you go over that, they issue you a good faith violation. They say, don't do this again. We're going to reset your account. And I believe Tasty, and don't quote me on this, but I believe Tasty Trade gives you 4. I think you can have 4 good faith violations in a 12-month rolling period. If you go over that, they'll put you on the sidelines for 3 months. You can't trade. But don't let that scare you, because here's what you do there. You simply open up a second account with Tasty Trade, move your money from the account that's frozen into the other one, and now you can trade again. Now you're wondering, how did you know that, Hugh? Well, it's because I actually had that happen to me a long time ago, and I called them, and the guy told me at Tasty Trade, here's what you can do. And we'll just open up another account, move your money over. Well, how long does that take? I don't know. A few minutes. What? So there are ways around it. So yes, you can start with $5,000. Don't let the pattern day trade rule spook you out. Another question here from Kevin. What percentage profit do you target for each trade? It's not necessarily percentage. Every trade is going to be a little bit different. There's going to be some trades I'm actually going to do very, very well with, percentage-wise. I look and see where's the stock probably going to go. All right, so my percentage could be really, really high. I'm actually testing a strategy right now that does very well. I'm not going to bring it out until I'm fully tested with it. But percentage, I'm quite happy with anywhere from 5 to 10% per trade or per day. But my scalps are probably less percentage wise, but I might look at, say, 6, 7, 10 cents per trade. All right. So again, I may put a lot more money into a trade, but I'll take lesser percentage. But dollar wise, I'm in and out of that trade. So I may make $100 or $200 per trade. But if I do that, say, 5 or 6 or 7 times in a day, I've got myself some pretty good, pretty nice bag of cash at the end of the day. Sometimes I'm happy with $200 a day. Sometimes I'm happy with just 100. It all depends on what I feel like and what the market's doing. And again, there are a lot of factors that go into it. But yes, you can. We're generally into the 5-6% a day range. Now you might not think that's a lot of money, but think of it this way: if you're netting out 5% a day, you're essentially doubling your money every month. Every 20 trades, you're doubling your money. Is that so bad? Show me something else. You think a CD is going to give that to you? Good luck with that. Why not trade the futures? Yes, Benny. You know what? I just don't. I don't know. I think I remember looking at the futures, and for whatever reason, either I didn't. I don't remember years and years ago whether I didn't understand them. I didn't like them. I thought they're risky. Maybe I didn't have good luck with them. I can't remember now. But I just trade SPY options. There are many options. There are many things to trade out there now. There's non-fungible assets. What the heck is that? A picture or something? Stay with currencies, crypto. A friend of mine got into crypto. He said, "Oh, you got to do crypto. Currency is dead. The US dollar is dead." Oh, really? Other than a Tesla, what else are you going to buy with your currency? Or what are those scammers that say, "I see what you're doing on the computer, and I'm going to send this picture off to all your contacts, but you're going to pay me, so much in crypto." I said, I stay away from crypto because I cannot put my finger on it, and if I lose that special code, I'm toast. Come on, it doesn't work that way. Anyway, if you buy this, will be any discount for the room. Gary, this is such an incredible discount. And the trading room is also at a very discounted price from what we used to have. Even a year ago, we were selling the trading room for $99 a week. And I think they're selling it now for what? I don't want to say the price. I don't know what the price is. $500 or $600 a quarter, some ridiculous thing. Basically, what amounts to a submarine sandwich, a Subway sandwich every day. Lunch, you're going to buy us lunch, you want a discount? We're giving you an amazing deal right here with this. So no more discounts. I appreciate you asking, and I'm not trying to be hard on you, but that's already discounted. So we can't stack the discounts either. So all right, gotta love you guys. John S., I appreciate your question on that. We're gonna look at these calls coming up early this week and see about possibly repairing those guys. And yeah, that'll be interesting, because I think if the market's going to go up and as soon as it breaks resistance, we'll probably have to get in there and to execute some repairs on that. And John S., he's also chiming in. He's in our trading room, folks. I got to tell you about this guy. He's been with us for a long time. And here's something else in the trading room. The longer you're with us, the better you're going to be. I don't know. I don't remember when John joined us, but I know he's been with us a long time. This guy rings the bell time and time again in the trading room, because we chime in. The trading room was interactive, and he tells us what he did. And he just checked in here. He said, I have a great, in capital letters, I have had great success with 6%. Don't kid yourself. 6% is an excellent return on investment here. Do you ever use stop loss orders and options trading? If so, how much is your downside? The way we trade, I do not regularly use stops. Not to say we do not manage our positions. Very much we do. Okay, we do. It's just that using stops is not the way to go. You will find that when you use a stop, I'm trying to cue something up here. Sorry about that, guys. A stop is not the way to go with SPY options. Okay. The reason is markets will come down in the normal course of its vacillation, and it's not uncommon to see the option go down 10, 20, even 30, 40% before it comes back into its profit. Okay. So I think it's really kind of important. And let me just give me half a second to get this one program kind of queued up here. Bear with me. And, okay, there we go. So we do manage our positions, and we teach you how to do that. That's something that we do. We do teach you how to do that, but stop does not really work the way you think it does. Might work for stocks, but not with options. So the answer there is we do not use stops for options the way we do here. So okay, Bob, explain your rationale for trading 50 delta options at 2 to 3 days till expiration rather than same day expiration. The reason is because the theta, it's a function of the theta. So he's asking why we have a little more time out with our options, even though we might want to get in and out the same day. It's because of the theta loss. If you're in the same day options, even though you want to get in and out right away, it doesn't mean the stock's going to go in your direction necessarily right away. You might have to wait an hour. Well, same day options, that theta could eat away. I like to have a little more time, a little more insurance, a little less theta loss as a percentage. Okay. It just takes the stress off it. Now, it's not like you're losing, even though the options are more expensive, you just buy fewer options, but it doesn't mean that you're going to lose the money. You're going to get that back when you sell it. So if you're going to, spend $3 on an option and you're going to sell it for $3.36 or something, you're still getting your $3 back. All right. So it has as a percentage a lower theta loss. That's the key on that one. How many people in the trading room? We have a lot of people in the trading room. I don't know how many. It doesn't matter. You're going to feel very important. You're going to feel like you're the only one. It's interactive. The trading rooms are interactive. So by that, that means that you can actually ask your questions in the questions box. And see, my picture always freezes here. And Aaron and I are the ones who see that. So go ahead and ask whatever you want. All right, so I'm going to move this along because I'm already pushing an hour here. I don't want to keep you up. Again, this exclusive get off the fence offer, personal one-on-one training, sessions at your convenience. You're going to go through our calendar, what suits you. And most of our training is available during market hours. So we're going to be using real-time data to teach you. You're going to learn to trade, hopefully, consistently, confidently, and profitably. I think those are really key words, because I think confident trading is very important to success. We can discuss anything at all concerning day trading SPY options. This is a limited time offer, 10 hours for $9.95. It's going to be in half-hour segments. So you get 20 segments and you have 12 months to use it. Now, here's the way I suggest. Maybe get 3 or 4 hours with me, 3 or 4 hours with Aaron, and then hold back the rest of the time for maybe down the road for like a refresher or a rust remover, if you will. All right, so maybe get in early, get your training done, and then have some time still available. So maybe several months or a few months down the line, you can actually, still book some time in case you need to, tighten up or freshen up on something. Okay, so you're going to get the link here, I believe, on the website. And if you don't, simply contact us. We'll send you the link for $9.95. And but there should be a payment page coming up after this session. And with that, let me see if there are any other quick questions I can get in here. Okay, all right. Your one-on-one coaching, will you be teaching us everything we need to know? The way you make money, like the way you do. Well, that's the intention, yes. And there's another. This is an interesting question. What if you get so many people that you won't have time to handle everybody? All right, that's a good question. So we are limiting the number of people who are going to be taking us up on this offer, so that everybody does have a good opportunity at getting in on a timely basis. We don't want to have so many people that, okay, yeah, well, you're gonna have to wait 3 weeks before you get online. No, that's not going to happen. We want to make sure everybody can get in on a timely basis here. If I need to extend it after the year, will I be able to? Look, folks, you got a year to use this. If you're really stuck that way, check with me then. But I would say use this within a year. You'll probably want to anyway. I'm new to trading. Here's another question. I'm new to trading. Is this something I can do? I'm retired after working all my life in the retail sector. We have a lot of people from all walks of life learning how to trade options. So I would say no reason, if you're comfortable with numbers and understanding some basic concepts here, very basic math. You don't have to have a degree in math or anything like that. Very basic math. No reason why you cannot learn how to do this. Okay, one more question. Will this really be you and Aaron training, coaching, or is it going to be one of your cronies? No, it's going to be either Aaron or myself doing all the coaching. Thank you all for joining us. Please do not hesitate. Get off the fence now and grab onto it. We'll see you next time. Thank you so much.
Brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what